Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Ashesha Advari. In the next 1 hour, we'll get you all the top buzzes in trade, why they are buzzing on the back of news flow or on the back of technicals. But first up, let's take stock of how the market is shaping up. It is a rather lackluster day, a choppy day of trade coming in, Ashesha, on Monday morning. Nifty we were not holding clearly, above the 25,100 levels. We've managed to scale those levels, but a very choppy trade, whipsawing is what we see on Nifty at least.
Indeed, and we are absolutely flat at the moment. In fact, the last time I did market check, the market was flat, and now it has dipped slightly into the red, down by about 11 odd points, but largely flat above that 24,100 mark. Nifty Bank, though, is outperforming in trade. In fact, Nifty Bank is holding on with gains of 0.25% near that 54,940 mark. We have Dr. Reddy's, which is under pressure. That one is down 2%, the biggest loser on the Nifty index, followed by Asian Paints, Shriram Finance, M&M, Cipla, Aisha Motors, all of them falling in excess of 1% in trade today. So yes, lackluster day for the Indian markets. But Ankita, let's get started with all the stocks that are buzzing in trade.
Absolutely. Let's get going with all the stocks that are in focus today. Then we are joined by Sameet Chavan, who's the head of research, technical and derivatives. Angel One is joining us from the technicals. From our research team, we're joined by Rabinder and Kanishka both. Hi, thank you. Good afternoon to all of you. Thank you so much for tuning in. Let's get started with all the stocks that are in focus then. The first stock that is in focus is HAL on the back of a note by Antique. Now, Antique is maintaining a buy call with a target price of 6,360 rupees. They feel that the supply challenges are easing off, and according to media articles, HAL has received the third delivery of GE 404 engine, and is expected to receive a fourth engine by September end. Now, HAL is also expected to supply first to Tejas Mk1A by October, and the near-term financials may seem a bit volatile on account of supply chain challenges it has been facing to execute the large Tejas Mk1A order. Now, they retain a positive stance on the company given the multi-year double-digit earnings growth potential. On the back of that, Antique is maintaining a buy call on HAL. On the back of that, HAL is in focus today.
Okay, so HAL in focus on the back of that. But Sameet, you have picked up Tube investment for us. Tell us, what do charts indicate for this counter and more moves coming in?
Yes, certainly looks like, after nearly a consolidation period of 3 months, the stock has finally given a decisive breakout from its long slumber phase. And if you look at the volume activity, it has risen substantially, so that provides some sort of credence to the move. Hence, going ahead, will not be surprised to see this stock heading towards 3,600, 3,650, and on the low side, 3,200, 3,250 would act as a very strong support.
Tube investments for you. The stock is holding up with gains of nearly 4%, and that's the technical view coming in. But let's also put the spotlight on capital market related stocks, ancillaries, exchanges, and several other players as well. And this is on the back of notification that came in from SEBI over the weekend after that meeting that was held on Friday, where they said that as far as F&O contracts is concerned, there was a clarification that came in from SEBI that longer term F&O contract is a complex issue. They are working on the same. There is no update to share shortly. Remember, there were several reports which suggested that weekly contracts could end. So on the back of this, they've come out with this clarification. BSE holding up with gains of nearly 1.5% on the back of this, and Engine One is also holding with gains in excess of 1.5%.
All right, moving on then. The next counter that is in focus, and that is Engineers India. Rabinder, big order win coming in for Engineers India. Take us through the contours of that deal.
Well, it's on the back of order win, Engineers India is in focus, where Engineers India has been awarded contract for providing project management consultancy services and engineering procurement and construction management services for a new fertilizer plant in Africa, and the cost of order is 618 crores. So back of, and if we talk about order book of the Engineers India, then as of 30th June 2025, company's order book stand at 12,144 crores. So back of this strong order win, Engineers India is in focus, and the stock is up approximately 1%.
Okay, so Engineers India holding on with gains of 1%, but Ankita, FMCG sector is also in focus, I believe, on the back of a report.
Yes, absolutely. Antique has come out with a note on the FMCG sector. They believe that the sequential recovery continues for the FMCG pack. The latest on-ground interaction that they had with dealers and distribution, the Nestle distributors witnessed a sequential recovery in dairy and nutrition business, while healthy traction continued across beverages, chocolates and confectionery. And instant noodles While ITC Foods portfolio performed well, while cigarettes witnessed stable offtake, HUL is witnessing a sequential recovery. However, the detergent portfolio was impacted owing to heavy monsoons. Dabur's offtake remains under pressure due to the beverage portfolio, and Emami witnessed a healthy offtake across most of its categories. Marico's offtake should be stable, led by the festive season. And the GCPL, they believe that it has witnessed healthy offtake in household insecticides led by mosquito infectants, and Colgate has witnessed healthy offtake owing to the general trade responding well to several trade schemes as well as price hikes taken in their portfolio. The GST rate cut is expected to drive the volume growth, improve the mid-high single digit, and they prefer GCPL, Marico and Emami in the consumer staple space. On the back of that, we do see GCPL, as I mentioned, that's up in a way 6.5% right now. Marico and Emami also in focus on the back of this note by Antique.
Indeed, so the entire FMCG and consumption basket in focus on the back of this Antique report. But Alchem Laboratories, Sameet, the stock is holding on with gains of over 1% today. 5514 is where it is currently trading. Where do you see the stock headed?
The chart structure looks quite encouraging. Recently, we saw a good, U-turn in stock prices from the levels of 46, 46.50. So after forming a good base around this, 47 and 4800 kind of zone, stock has already given a sharp rally followed by some consolidation. And after nearly, consolidating for nearly 3 weeks, stock prices have resumed its upward trajectory. And it is now challenging its recent, swing highs of 55.20, 55.50. So overall, yes, chart structure looks quite encouraging, and from here on, will not be surprised to see the stock heading towards 57.50, 5800 over the next couple of weeks' time. On the lower side now, 5200 followed by 5000 would act as a very strong support.
Alright, moving on from Alchem Labs on the charts to the next counter, L&T, that is in focus in the back of big order win. Kanishka, tell us about the details about this order win.
That's right. Like you said, L&T is in the spotlight today after bagging a very large order. It's worth, it's a large order, so it's in the range of 2,500 to 5,000 crore rupees. The order is for Mumbai Ahmedabad bullet train project. In fact, it has come from National High Speed Rail Corporation. It covers 156 kilometers of high speed bassless track that includes 21 kilometers in underground sections and 135 kilometers in elevated viaducts. Now, this is L&T's second major track work win in the corridor. This is after it secured 116-kilometer package back in 2022. Now, with this latest order, L&T now commands responsibility for over half of the track works in India's first bullet train project. This contract has a scope that spans across design, supply, construction, testing and commissioning, that is reinforcing L&T's leadership in the large-scale infrastructure execution, and hence the stock is in focus, trading about 0.5% higher as we speak.
Okay, so that's L&T for you, holding on with gains on the back of that. But CSC, Sameet, on the chart, so what do technicals suggest for this name?
See, as far as CS is concerned, this stock has been forming some sort of base around 150 since last 3 to 4 weeks, and today we are seeing good traction in this counter. Stock prices have already traversed its 89-day exponential average, which has been acting as a very strong resistance since last 3 months. If you look at the placement of RSI momentum oscillator, which is moving upwards now, so which provides some sort of credence to the move, and hence once we see a breakout happening beyond 170, stock prices can head towards 180, 182 in following couple of week sessions. So if we look at the overall price activity, we are quite upbeat on the stock, and on the lower side 160, 158 would act as a very strong support.
Okay, so that's that, but let's also put the spotlight on the auto sector, and this is on the back of an HSBC report. In fact, the entire sector is in focus on the back of this, where they say that on account of GST cut, which is likely to come into effect on the 22nd of September, this is likely to create demand boost for the entire sector. In fact, they are factoring in 200 to 300 basis point higher CAGR over the next 4 to 5 years for several of these players. They have raised their target price for Maruti, Hyundai and TVS Motor. For Maruti Suzuki, they've given a target price of 17,000 versus 14,000 earlier. Hyundai at 2,800 versus 2,300 earlier. And for TVS Motor, 4,000 versus 3,500 earlier, and they have buy rating on all these three counters. So this is largely on account of GST cut and the fact that this will boost demand, and the CAGR growth is likely to be higher, volume growth is likely to be higher, and that is the reason the entire sector continues to remain in focus today.
All right, moving on to the next counter that you picked out for us, Hudco. Sameet, Hudco is what you picked out for us. It's done decent in the last 6 months. In the last 2 days also, I mean, in fact, today also it is trading with gains of 3% odd. Do you see this upside to continue?
Yes, in fact, most of the housing development stocks are doing well today since morning. And if you look at the Hudco, it has already traversed 200-day simple moving average along with sizable volumes. So it seems that the stock has come out of its recent conversion phase, and from here on, 235, 240, these are the next important levels to watch out for. So we are quite upbeat on this stock after a long time. It seems that early signs of revival are seen in this particular counter. And if you look at the volume activity, it has risen substantially. So yes, Hudco looks quite promising at current level. 235, 240, these are the next levels to watch out for. And on the lower side, any decline is likely to get followed.
Okay, so that's the technical view coming in on Hudco, but shifting focus to the primary market then, and a lot of action in that space. iValue Info Solutions plans a 560 crore IPO, and it is set to open for subscription on September 18, and it will close on the 22nd. We caught up with Sunil Kumar Pillai, promoter and CMD, and Mr. Venkata Nagaswarup Muvala, CFO of iValue Info Solutions, to understand their growth plans. Listen in to an excerpt of that exclusive conversation.
Since we have served about close to 6,000 plus customers in the last 18 years, we have deeper insights about the customers' digital transformation or digital journey that each one of them are taking. End of the day, if you notice that every customer is serving some customers in the market. So we understand that business needs, we understand the technology that will play a pivotal role in their journey and in establishing or making an outreach for those customers. So what we do typically is that we bring all these technologies. We have a center of excellence center in Bangalore. We curate all those solutions. We show the impact of those solutions for a customer, and the customer is able to establish a very meaningful decision before buying the product. So they get to validate the impact of the solution that they are going to adapt to. So that is one of the best unique, positioning of ours. And this gives a jumpstart to a lot of OEMs, the technology vendors. There are a lot of niche technology vendors who are coming into India, and we become the gateway of India for them. They can do a dipstick, they can do the litmus test through us, wherein we curate their solutions along with other existing OEMs, and we position and showcase those solutions to the customers. This way, what happens for a OEM is that they get an instant gratification of certain called out customers where we can go and position our solutions. And since we have a base of 6,000 customers, we have been able to categorize those 6,000 customers within the market verticals. So we can pick and choose a vertical, we can pick and choose a customer in that vertical and go and showcase these solutions. So for an OEM, we become a platform for a jumpstart their business. Besides this, what happens is that even for system integrators, we actually complement to their existing business. We go to the end customer and we do some level of heavy lifting in terms of showcasing those solutions, which actually saves a lot of time from a system integrator's perspective, because already the customer has seen the solution that we have shown. They are ready for those solutions. They just have to choose the system integrator to implement the solution to them.
Swaroop, come in here and give me a sense of your margins, because 12.36% is the margin, while it has fallen from 12.7 in the previous year. Is the margin for you in this category around 12 to 13%, or there is enough headroom or levers available for you to increase the margin?
iValue as a company has been one of the pioneers in this segment across the four verticals, which is cybersecurity, ILM, data center cloud, and the application lifecycle management. This is a very, technology-rich segment. Understanding of the technology is one of the biggest strengths which we bring onto the table. Coming on to the margins per se, the margins, we look at it on the gross sales of the company. The gross sales around 2,500 crores is what we have done in FY25. You can see that in our RHP and other things. Our margins have been consistent and are growing. And we believe that there is some headroom for the operating leverages to kick in, thereby positively impacting our bottom lines.
Can you also take us through your international operations, because currently 11.6% come from overseas and remaining comes from the India business. So what is the kind of growth that you're looking at in various geographies? And I assume that it's actually non-US and non-European territories that you're selling your softwares or your products to.
Well, Sajid, when we started this operation, we were this Southeast Asia market is to contribute only 1%. If you see last year, we have grown up to 11%, and the base is low, so the growth is faster over there. But the best part about it is that in India, we have about 50% of our resources, human resources, are in technical space, in the technology space, and they are upskilling themselves. But what happens to the skills that they have already adapted to? So what we do is that we are using our same resources to cater to this growing markets, which may be a little bit behind India in terms of technology adoption. But then when they adapt to those technologies, we are ready with our skilled resources, and we have been able to cater to those markets. So if you see the market like Bangladesh, Sri Lanka, Nepal, then the Cambodia, Singapore, Malaysia, and all these markets, they are the very fast growing market, and we see a great potential coming out of it. In the next few years, we think that they will hover somewhere around between 11 to 20% is what we feel. They will continue to contribute.
Another area which is also could be a concern is a top 10 OEM account for 63% of your gross sales. What is it being done to diversify your risk there?
Sajid, we find this to be very natural, very organic in nature, because the reason being, we are a growing organization, and so there would be certain level of technical and the upskill, the technology know-how and the curator solution that I mentioned to you earlier, and the multi-stack solution. Obviously, by virtue of that, we would have certain level of concentration. But then, if you notice in the RHP also, we have been adding new technology vendors into our stack of solutions. Now, those technology vendors are the next breed of technologies that is round the corner. They are getting their footprint strong in this market, and we see a greater potential coming out of these technologies. And by virtue of those, while we don't degrow on the business that we have already been doing with our current 10 OEMs, but then we see that the concentration level will come down and narrow down.
All right, that was the management of Info Solutions. But moving on from the iValue IPO to the counter that is in focus today, and that is Adani Power. Kanishka, Adani Power's, why is that in focus?
That's right. It is in focus on the back of another order win. It has bagged a big order from in Bihar. Now, it received a letter of intent from Bihar State Power Generation Company to set up a massive 2,400 megawatt ultra supercritical thermal power plant in Bhagalpur. In fact, it has signed a 25-year supply agreement with the state utility. The project, it's worth nearly $3 billion. It will run on a build, finance, own and operate model with 3 units of 800 megawatt each. The company won the bid by offering the lowest tariff at 6.075 rupees per unit with coal supply secured under the government's Shakti policy. Now, this plant is expected to create about 10 to 12,000 jobs during construction and around 3,000 permanent jobs as well once operational. Now, with full commissioning targeted within 60 months. So that's the reason why Adani Power is in focus today.
All right, Adani Power in focus on the back of that news flow, but another counter that is in focus is Havells on the back of a note by Goldman Sachs, where they're maintaining a buy call, and they've hiked the target price to 1,720 rupees from an earlier 1,600 rupees. On the back of that, the stock is up in a way 1.3%. They feel that Havells is well positioned for growth revival in the electrical durable segment, and the Q2 will be disrupted by the GST implementation. Uncertainty would see any share price weakness as opportunity to build on positions in the stock. Now, shares have not corrected much. They believe that the earnings growth revival can drive up multiples and lead valuations higher. On the back of that, they're maintaining a buy call in Havells, and that stock is up and away 1.3% in the trade.
Okay, so that's Havells for you, up 1.3%. Goldman Sachs has maintained a buy, but let's also put the spotlight on Siemens then. Sameet, the stock in an otherwise tepid market is down 0.8% at 92. Or rather, okay, Siemens India, that's one for you, but that's one. What will your technical view be on Siemens?
It certainly looks, encouraging. Stock prices have, already given a breakout from its recent multiple swing high of 3,200. And if we look at the volume activity as well as the placement of RSS movement on daily time frame chart, it suggests that this up move is likely to extend from here on. Immediately 3,400, 3,420, these are the levels to watch out for. But once this stock, surpasses this multi-month highs, then will not be surprised to see this stock even, surpassing 3,600 in coming weeks, in fact, coming months itself. So overall, yes, the bias remains positive. Any decline is likely to get poured into. On the lower side now, 3,200 followed by 3,100 would act as a very strong support.
All right, that's Siemens India on the charts that's up and away 3% in the trading session. But in a striking new campaign, Auxenberg has unveiled its latest collection for the modern man. Known for its contemporary designs and precision tailoring, the brand's new line reflects sophistication with a modern flair. Let's have a look.